Thank you, Hadi, for the great talk. Our last session for the day is a panel discussion on regulations, legal framework to support banking innovation. This panel addresses the best practices in financial technology regulations, the role that sandboxes can play, as well as the risks that regulators need to mitigate when it comes to nascent technology and security. Please, let's welcome the moderator of this session, Mohammed Alim, the founder and senior partner at Alim and Associates.
I should thank Hadi for starting the heat up on the discussion, because now we're looking at predictions that will change the world, but we should always think like this. We will be more of a bit realistic, but at the same time, we will address the challenges that are facing the international community on the level of fintech, including but not limited to cryptocurrency. Okay, let's try to divide the subject in two big issues. The one is the overall regulatory framework that controls startups in fintech, that controls facilitating fintech operations, that bring certain changes to the way banks are doing business, programming some of the matters, taking these guys into e-banking, etc. And the second part is more about the really new banking instruments, financial dealings that have never existed in commercial lending or in commercial banking, and that technology is seriously disrupting. Now, obviously, I will be accompanied by my very esteemed two colleagues that I will introduce in a minute, but very quickly so that we can start up and fire on the project directly. The first feel is that as somebody that has worked and has had the privilege of being in the forefront of the regulatory development in Lebanon since 1995, when we started the first ISP in Lebanon at the time, it was still a dial-in, to the 1996, 7, and 8, where the Central Bank of Lebanon rightfully started understanding the importance of using all of this technology into the banking world. A lot has happened in Lebanon. We are certainly quite advanced at this level. The Central Bank has even secured an amazing platform, technological platform, to receive all the data, store all the data from the Lebanese commercial banks. We have a very tough banking secrecy law in Lebanon that was extremely well preserved. We discussed security, access, data storage, etc., even the technical sides. Lebanon is certainly in the right direction on this level. Let's check on the other countries before we pass to our other subject. Let me please introduce you very quickly to both Dr. Khalid AlTawil, who's the executive board member of the ICC, obviously a supranational entity. He's also residing in Saudi Arabia, so he will give us insights on the international regulation and how it is developing, but also on a Saudi level, which is quite interesting to see how SAMA, which is the national regulator in Saudi, will deal with these things. At the same time, we should also welcome my dear friend Serdar Gunnar, who's the director supervision at the DFSA, the Dubai Financial Services Authority. That is basically the regulator of the DIFC that has to work also in the realm of the DIFC, but also with the national regulator being the Central Bank of the UAE. And we will start understanding a bit more on those two topics. So I'm going to start by you, Gunnar. Why don't we just see where the FSA today is in terms of e-payments, evolving technologies, and how do you see the future?
Okay, well, first of all, I guess Thank you for this. Thank you for the introduction. I guess the first thing is to congratulate everybody. It's a pretty full house after lunch, so well done. Everybody's here. That's a good sign. So the landscape in the DIFC and the FSA today, I have to say, it's been a challenging few years for everybody, including all regulators, including the DFSA. We have few times this came into the topics. We have in the DIFC what we call the Hive, which is basically a type of a sandbox that pulls in different types of fintech firms. And from that group of firms, the FSA basically is picking up the ones that needs to be regulated or that are in the financial services business. The FSA is a financial regulator, so we focus on those firms that are delivering financial services. And the big challenge, and we can talk about this quite a bit probably, there's been a lot going on in terms of the regulation. For example, we started introducing our crowdfunding regulations, both loan and equity. We're looking at, based on the interest that is coming in from the market. And I have to say that's been quite intense this past few years. And we have seen applicants or the inquiries coming from, you name it, from cryptocurrency to robo-advisor to crowdfunding and the combination thereof. There are so many variations to it. But to me, if I can summarize everything, I think the big challenge has been trying to come to some kind of an understanding or grasp with the reality of the delivery of financial services using digital means. Now, how do we do this? How do we regulate this is really the big challenge. And we can start talking about this in so many ways. What type of rules do we have to have for payment services in the wallets? What is a cryptocurrency? There is this discussion going on, for example, is it a security? Is it an asset? Is it whatever it is? All of these are hinges on the existing regulatory framework, which needs to identify certain products or certain type of financial services and put them in some category. And the challenge today is none of these products and most of the services kind of crisscross or go across the different types of services and products. A good example of that are these crypto assets, And the big discussion there is it a security? Is it an asset? Is it a currency? And what we see is actually they keep changing their nature throughout their lifetime. So trying to categorize them as one and trying to apply certain rules, it's very difficult. So this is the big challenge, I think, for all regulators today, and that's the wider discussion, is how to regulate, how to manage the delivery of financial services in the digital environment. And that has so many dimensions to it, from conduct to prudential, and in terms of the product types and service types and how to categorize and how to write relevant rules for it. So this is kind of where we are right now.
Great. Thank you very much. Dr. Khalid, what's the position of the International Chamber of Commerce in general, and how does it look in Saudi these days in regulating financial services in their new format?
Okay, good afternoon, everyone. It's a very interesting topic. As you know, it's always the case. There is two scenarios. People believe that technology with the fast can drive things and force things sometimes in life. So when this wave of cryptocurrency or Bitcoin came up, and lots of people pushing, so there is a certain limit where people believe that this will drive central banks and also the banking to accept this fact, and it will move. On the other scenario, there are also many who believe that, this is like gambling. You buy something, you don't know what is it, you don't know what's the source, you don't know who owns it. You just gamble, you maybe make money or you may lose money. So from ICC point of view, internationally, there is a committee, a task force, preparing especially some regulations for regulating this cryptocurrency or digital money or in this aspect. And they have a meeting in March, preparing basically for the G20 meeting. It's interesting. It is slow, but it's evolving. There is already a draft been done on this on this, and it's also led by France initiatives. I think it will move. It will take some time, but I think this year we will see at least more streamlining in terms of regulations in this aspect. As it started, it is mainly allowed, or it is you can deal with or buy cryptocurrencies and deal with them. As we went last year, many countries banned them. So there is, as my colleague earlier said, only a few allows them or consider them as legal currencies. So why they come or they need to regulate this? They look at this and found actually many like interesting things. First, there are some money laundering issue with this, so circulation of money or using money improperly is one issue, which at least forcing governments and regulators to work on this. The other issue, which is also hinted by my colleague here, is double taxation, or if you treat it as a commodity, you need to tax it. If you are treating it as a currency, then it's not taxable. So this taxation issue is driving mainly also the EU putting more efforts to regulate it. Also regulating it from another aspect in terms of registration or even registering the exchange that handles this cryptocurrency deals. So this is also part of regulation aspects that they worry about. Now, in addition to these, also there is an issue for authentication or KYC issues dealing with these. And of course, more importantly, is protecting the customers and their real asset or their real money. So this is like globally. In terms of the region here, GCC level or in Saudi, central bank SAMA in Saudi is well known in terms of it's a very strong control on the banking industry and a very strong regulators in many aspects. So many of things are very well regulated. So if you look at like e-payment gateway like Serdar for e-payments, or if you look at all other insurance maybe regulations, so there is a good amount of control. So let me also share with you an experience before 5 years. When the telecom industry started to get into the money issue in terms of mobile money or putting this money through SMS or through telecom, there is a good talks and lots of debates between telecom and the central bank or the banks, whether this is allowed, not allowed, but it has been banned until now by SAMA. And this comes from the fact that that traditional banking industry is based on normal practice. Money, paper you take, or assets you put, loans you give and charge. So it is all into this, controlling the customer, controlling the money handling, and this is how they make their money. So this is basically a threat market for them if it comes from either telecom, which is 5 or 7 years ago, or now from an issue like cryptocurrency, maybe taking some of what they have. So this is quite interesting. This year, I think it has been moved or moving very quickly in terms of pilot projects. There is an effort between Saudi and UAE for a digital shared cryptocurrency. There is another also pilot project with SAMA and Ripple, which is being piloted with some banks. And this was of interest to banks because of one issue. Normally, when you do cross-border money handling, there is a third party in between, either SWIFT or a bank or some others that take charges. So there is charges paid. So when this issue of a cryptocurrency or blockchain technology came out, And they looked at it from money issue, whether they will save some money doing this or no. Saving money means also making more money for them. So that's pilot is basically developing a technology for cross-border money transactions in which you will take out the third-party charges and you will be able to save hundreds of millions by adapting this. So the other also interesting pilot projects that many banks are doing is related to digital money, which we may talk about later.
We will.
And one also last thing that's happening now in Saudi is mainly a project by Serdar, which is the e-payment gateway that connects all banks with the customers or citizens or residents of the country. There is a project to digitize most of these activities and provide digital services for money handling. But in summary, I would say that in general, blockchain or other fintech technology will stay and will drive markets. Adoption of maybe cryptocurrency or certain things, special currencies, it will take, I think, some times. I also strongly believe that still this banks will stay to continue there, the branches
Absolutely.
will be there. So to
Absolutely.
continue.
Thank you, Dr. Khalid. Thank you. But I think it's a very interesting topic, and how it's going to be driven is essential. Now, when we go back to the discussion on what would be the obstacles that we will have to face, I think probably one of the strongest obstacles is the way traditional commercial banks look at revenue streams and how this is going to change their lives. May I suggest that on this level, it's like the inevitable coming. It is coming no matter what you do. Isn't it the right time also to take the banks through the process of educating the banks versus educating the consumers on the fact that they need to embrace and let go on some of the constraints that have been predominantly based on, making sure that their streamline of business is non-stop and that their regular way of doing things don't change that fast. How do you feel about this, Serdar?
I think we're kind of in a lucky situation in the DFSA because we regulate a spectrum of institutions, not just banks. So we actually see, we have a number of banks in the center. I think last count was close to 30 international banks. But we also regulate different type of activities, funds, insurance companies, arrangers, advisors, and so on and so forth. So one interesting thing that I see here is kind of relates to your question, is how we've seen, especially through the fintech applications that are coming in, is this basically the deconstruction of the banking business kind of manifesting itself in these applications. So we see, for example, an integrated banking business almost split into different pieces here. So we see, for example, crowdfunders coming in, robo-advisors coming in, payment services coming in. So you almost see the banking business in its entirety is done kind of like in a narrow scope by these fintech companies. So now this is probably a big challenge for the banks because it directly relates to their revenue streams. It relates to their strategy, business scope, and so on and so forth. I think throughout the years, what we have done, we are very used to see an integrated banking business handling all of these functions under one roof as a trusted party. And that when you have a fintech company coming in and doing a very narrow scope of that service in a very effective, cost-efficient, and in a way, in a much better way, as we all experience in one way or the other, it is a challenge for the banks. So I think that has to be reconciled somehow within the strategy and the approaches that the banks are taking. How are they going to be approaching this? Whether they're going to be say, for example, a distributed type of service business, Is it going to be a better bank, adopting these digital technologies and using them? Is it going to be a disintermediated business, maybe other end of the spectrum? Those are all questions, and some wise man a long time ago said you never use or reveal what and when in the same sentence. Although I think we had made a prediction in the prior presentation that these digital currencies and assets will be regulated. I'm going to refrain from doing that, but what I can tell you is that this trend will definitely continue because we see that in the inquiry stream, the authorization stream that is coming in. It's not slowing down. We're getting more and more of these. So these narrow scope, very focused businesses and services will continue doing what they're doing, whether they do that in partnership with the banks or otherwise, in one of many ways that they're doing, is I think time will tell.
Okay, I think it directly brings us to a very big question is, do you think, Dr. Khalid, that traditional banking is gone or is about to go out? Let me share this very quick example with you. I was recently working on a bank acquisition in Europe, and the fact that this specific bank that we were acquiring had 3,000 branches was not a plus.
Yes, that's a very interesting discussions. I meet with some CEOs of the Saudi banks, and last week I was on a meeting. He's the CEO of one of the largest banks in Saudi, and he still strongly feels that no, branches is the way to expand, and they will continue to bring customers, they will continue to bring money, because at the end I think there's still some human aspect of it. Still, maybe the new generation will have enough trust in digital money and internet, but the old generation who's still there, they will not trust. They want to go to the bank, they want to see the banker, they want to see their money. So I think this debate is interesting, but what I think is driving it, as I said, it's always technology is much faster than regulations or adapting to it, and it drives things in general. If you look at what happened in China last year, 2017, with the e-payment or mobile payment coming from mainly two players, Alipay and a company called WeChat, which is the equivalent of WhatsApp here in our region in GCC. But if you look at the data and the growth quarter on quarter, it is really amazing. Now there is more than 500 million subscribers in China. More than 70% of them use these two payments for doing almost all their transactions. They ride the bus, they buy food, they even give loan to others, they send money to their friend, they do everything, no cash. So they do all in all. So now Alipay, I think it deals with more than 27 currencies, more than 30 countries. So it's a huge multi-billion dollars is done through this. So I was also talking to some CEOs of the banks. This some way or another has to come in the region. It will definitely come. It's only a matter of time. So I know some banks in Saudi, they are doing some pilot project on similar things, not to that extent. Because if you think of this, if Alipay or WeChat take this multi-billion handling of money, the banks are threatened. So they might lose some of their fees or charges. So they will try to fight this. And then they go to central banks also in order to convince them that there's problems in this, don't do this. But I think at the end of the day, it will happen. I can see from SAMA, which is the money agency in Saudi, they are now more open into these technologies and these aspects, and they will, I think, allow or open this to move on, because at the end it is convenience, it is ease of use, it is also less cash handling. It's a very easy way to deal
I'm
with things.
actually curious. That's an interesting thing.
Exactly,
You
because
asked,
my question
yeah.
was on the Dubai. Because we've had a lot of news about Dubai wanting to go there, and obviously you sitting inside the regulation platform, how do you see this and like the sovereign nation expression by saying, listen, this is my new currency, this is what I'm going to do with it. How do you see this?
Well, I think the big discussion there goes back to what I originally mentioned there. How do we deal with the digital delivery of the services? Now, one important aspect is I'm just curious about this. First of all, I'm kind of puzzled about this too, I have to say. I'm wondering in this room, how many of you have been to a bank branch in this past month? Two people raised their hands. Oh, three, I'm sorry. So there must be about, probably, would you say, close to 70, 80 people
that have
here?
not been there. Yeah.
Well, I mean, I can tell you that I find that quite interesting because there were some presentations here also that kind of mentioned how branch banking is still here to stay. But, I mean, I look at my family, I have 3 children, and, you know, branch banking is something not that they know that intimately. I mean, they do everything in their phones and their mobiles and whatever they have, tablets and so on and so forth. So whether the traditional banking is dead or not, I don't think it's dead. It's morphed into a very different realm right now. It's being handled in a different type of sphere, in a different way. So, I mean, when I think about traditional banking, I'm thinking about, you know, some of the old movies, you go in and you put the money in this little hole, and the guy takes the money and stamps it. And there is the, you know, community banking and so on and so forth. That's still probably continuing, but in a digital format. I mean, it's happening still. There are still loans granted. People are standing money. It's just done differently. So whether it's dead or not, I'm not really sure. I don't think it's dead. I think it's just morphed into something totally different. So it's almost like asking whether the, you know, cars are dead. They're not dead, but they're driving themselves now. So that's one thing. On the other question, you know, these new digital products, like I mentioned originally, they really don't fit into one category neatly that we have. I mean, this is a kind of, we created our regulatory rules over a long time of, you know, trial and error and experience, over a few hundred years probably. And they're kind of like a product of that analog world. You know, they kind of assume that you walk into a bank and you put in the money and people ask you your ID and so on and so forth. Now, all of those change to a different type of, you know, delivery and management service. So the rules also have to kind of change and accommodate that. And we are trying to do that, I can tell you that. We are looking at our rules. Like I mentioned, we, for example, introduced our crowdfunding rules. But increasingly, what I see in there is how to handle these transactions from a regulatory perspective, is they have to be more on a supervisory perspective. And perhaps I'm a little bit biased on that because I'm within the supervision, but I see supervision having a lot better tools, and at least maybe not better, but more nimble tools to be able to manage with these risks at a much faster and a better way. Because when you write a rule, one of the experiences that we have, for example, you write a rule and you think that you covered everything, and then 3 months later you realize, okay, you know what, there's an instance it doesn't fit into this situation, it doesn't fit into the other situation.
Exactly.
So what happens, the rules all of a sudden start breeding more rules, you start writing more rules and so on and so forth. So what we can do, a lot of these risks that we're talking about, cryptocurrencies, ICOs and so on and so forth, we can actually identify them, just like you mentioned, for example, the AML risk. I mean, we know about AML risk. We know how to handle these things. So we can put, you know, a process together to be able to manage those risks and products. It's just that writing a specific AML rule for a specific crypto asset is a bit difficult because it keeps morphing into something else. It forks, it changes its nature, it becomes kind of, it starts to behave like a bond and sometimes like a security. So I think we need to have a flexible regulatory framework to be able to manage those. I think this is where we are.
Well, thank you both, Serdar and Dr. Khalid. I think it's been extremely interesting. I will close with even more questions from a regulatory point of view on how this thing is going to look like in the next few years. Let's try to first acknowledge that there is worldwide 10 times more money in the banks that there is actual currency. That's a fact. So
we already digitized most of
we're
the money.
already digitized for a very long time. Now, the question is, when the sovereign entities will start working, how will they look at something like this? And how the supra-sovereign, because even you can't just decide that this is what you're going to do in your country. If a foreigner comes in with a US dollar, how will you exchange it, etc., on a Dubai coin or a Saudi coin or whatever that is, in a world where you are not recognized on an international scale. And that will be probably the next challenge of the whole thing, and see how the economies will work together on this basis. But that's probably the chapter of another session. Thank you very much for your time, and hopefully it was a bit directing in the very difficult understanding of regulatory framework, and I will open for questions. Yes, sir.
Thank you very much for the panelists. My question is whether you think that there is maybe regulatory resistance towards some of these advances in these technologies that are kind of seen in the light of employment. So like if you want to tie to the debate going on in the AI world, whether automation will lead to less jobs. I think Mr. Malami mentioned the bank that you were considering to acquire and that had 3,000 branches in Europe, and that was seen as a negative thing. That may be true from an investor perspective, but maybe from the regulatory perspective is that the regulatory is a public entity that also caters for curbing unemployment and kind of creating an economy that works. So that kind of concern is that 3,000 branches hire more people than a centralized virtual branch with less people.
Well, thank you. It's a very good question. Obviously, on the fintech side, that's different. That's a bit different, because yes, we see resistance, but it's not from the same angle. I will give you a very quick example. A few years back, I was asked by the Lebanese central bank to draft regulation on crowdfunding that would be basically look like what we have in the UK and the US. So we come up also with alternatives to traditional bank lending. And we did draft this, and it passed as a regulation. But since then, that's 4 or 5 years ago, we have not had one successful licensed entity in this field. Is this coming only because that may have banks lose jobs? I think it's also the industry paradigm that we're facing. Now, coming back to your question more specifically, and that is not only on the banking sector or anything. Technology is disrupting the world and jobs, no matter what we do. There is, however, and I'm participating next month in a, let's say, called upon philosophical discussion in Paris for a group that is looking at asking governments worldwide to create some sort of a new charter of human rights related to the application of technology. So if you will go from one place to another, so yes, regular bank employments will be lost. In the US alone, 1.8 million truck drivers will go out of business immediately by 2020. One state in China has already 1.2 million buses that drive themselves. So yes, the impact will be seen. Now, in certain other kind of blue-collar, white-collar jobs, the thing is, how fast would you want to go? Do you want to give people also time to move from one place to another, to bring them also to another way of seeing the same things? We'll see. We will see. I think it's a huge debate. Hopefully, the world will come to some sort of consensus on getting a feel of not complete disruption, but basically just go with the flow of the technological impact.
But you don't think that that's a consideration for the regulatory right now to consider? Do you think that's not
It's certainly the regulatory, by the end of the day, is part of even a bigger structure, which is government. So governments are worried about employments. They have their eye on unemployment rates. They want to make sure that you don't lose. Actually, everybody runs after creating employments. Now, employment is changing also. So if you want to stay traditional, it's inevitable that if you are a car mechanic, you will have less work to do on an electric engine in 20 years from today. Sorry, Khalid.
I will just comment. You know, I think it is not an issue for regulatory or banks that you will lose jobs, or it's not like AI or robotics, or it's much worse there. So I think the issue from central banks or regulatory, when they look at whether it's blockchain technology or cryptocurrency or any, in fact, no, I think it creates also jobs in the IT sector or the technology sector or fintech sector. So I don't think really it is an issue as the AI or as the drivers issue with the cars. In this area, I don't think it is a major concern. You should not worry about it.
Sorry. Yes.
Thank you very much. Actually, it was very interesting. I just have two questions. One, do you recommend the sandbox example for central bank to adopt? Do you have, if anybody would like to venture into regulating fintech, the sandbox, is it the best approach? What's your saying about this? And the second one, how long do you think the region is far behind in terms of adopting the technology? And who do you think are going to be the pioneers in the Arab countries?
Now on the sandbox, sure. That's, I actually have a colleague of mine sitting in the crowd over here who's kind of leading our efforts in that. But what I can tell you is I talked to you a little bit about the Hive. When these firms come out of the Hive, we basically put them in what we call an innovation testing license. So these are smaller firms. They're in the startup phase. They're technology driven. Again, they go into the delivery of these financial services through, we have, for example, some robo-advisors there. We have a crowdfunding on the real estate crowdfunding area. Our goal with this innovation testing license is actually a regular financial service license. That's what we grant these firms, but with a lot of restrictions and modifications. So that they can start their business with a smaller, maybe a, not a very high impact basis with limited number of customers, limited number of exposures. And our goal is to remove these waivers throughout 9 to 12 months period to bring them to a point where they can be fully licensed. And then up until that point, of course, we are in close contact with them. And I can tell you, for example, our staff with them pretty much every other day talking to these firms. So that environment, I talked a little bit about the supervisory approach and how this fits kind of nicely to these new technologies, new risks that are coming up, because we're able to address those in a much more, reactive way, much faster way. So that process, in my mind, has worked very good. And I think that sandbox concept is a good one, especially for the, new types of businesses, new types of risks that are coming up in terms of financial technology side. So I'd be all for that. That's number one. For your second question, where is the region? What I can tell you is Dubai is, I think, has been on the forefront of this. We've been doing a lot at the greater Dubai and within the DFSA, DIFC and DFSA. The 2020 vision that we have, and, literally cashless and digital society is one of the goals that we have, and we've aligned ourselves with those goals. So I'm going to be a little bit biased on that one and say probably Dubai is pretty far ahead of everybody, and I think we're going to stay that way.
Dr. Khalid, Saudi will be in the forefront.
No, not necessarily.
Ask me,
No.
Lebanon will be in the forefront.
I think first part, the recommendation for tech or fintech or startups, I think it is two things to keep in mind. Make sure that banks or central banks or regulatory will accept it. Second thing is that keep in mind, if it takes 1 month in another sector, it takes 10 months in the financial sector to convince or regulate things. It takes much longer time. The other one which is related, I think the countries with more agile or adaptive or less control on the financial sectors will see more advances, maybe like Dubai. I think Saudi is a stronger control on the SAMA and heavily controlled, regulated. It will take longer time. But I think within 1 to 3 years, you will see many of these on the ground, mobile or digital money there.
Well, I have to say, but I have to make the last word over here, that in terms of the controls, we certainly have very strong controls.
Yes.
I think the idea is the
I saw
approach.
this coming. I saw this coming. You know, on the discussion, yeah. Well, who has tougher control? We have a lot of tough controls over here, but innovation is getting there. So I think also we scored quite well in Lebanon in developing very quickly, catching up within the last 3 years. Sorry, one final question. Yes. Can I add my question to him, because it's very interesting that you open up this subject. There is a similar system in Dubai. What is it called?
Well, I mean, within the DIFC, we don't really have
Not
that kind of,
DIFC, but there is, okay, but let's suppose it's Sadat, some
dirham, e-dirham like this. There is
yeah,
already-
dirham, whatever. So somebody tried to pay a parking ticket at the police in Dubai, and they said, no, you can't pay it here anymore. You have to go to the Sadat-like thing.
The e-payment
So
one.
we have to also make sure that there is still a possibility for those who don't want to pay through a phone because he doesn't have a phone,
Yes, yes.
which is crazy. Yes, but do you have...
Yes, I think there is, as I said, there is pilot projects with some banks to integrate with Sadat, the other payments, technology payments. But the interesting thing is there is lots of infrastructure there, like points of sales, integration, that has to be changed. There are already some pilot projects to change these, but to change an existing infrastructure takes some time.
Who owns Sadat?
Sadat is owned by the government. It's like a company to be IPO'd or to be traded later, but it is regulated by SAMA.
Which is a good example
Yes,
for
yes.
for us.
Yeah.
Great. Thank you very much.
Thank you.
All right, thank you for the insightful discussion. The Banking Innovation Day has come to an end. Please feel free to go to Emirates Hall downstairs to catch up on our program. Thanks again for sticking around and enjoy the rest of your day.